what I did is just, okay, so let's follow the series of longs. So first of all, we have this anchor. I have identified this anchor, you know, from the 94.67s as a valid anchor. We have traded this anchor once to target and started blowing through, and we found support on Friday. And this support level, while never filling its long targets, has brought us up to new highs. So following this, and this is really the point why I want to make, and the reason why I decided to do this webinar today, is okay. Let's follow the series of longs that we had on the euro dollar, on the dollar yen. So we have a halfway back long, goes to target and starts blowing through targets. Then we have an extension long over here, you know, goes to targets. After going to targets, this extension long retraces over here again and starts blowing through targets. So upon that happening, we immediately start a new extension long over here. Now this did dip in for like half a pip into its 61.8 line, but regardless, you know, that didn't break it. You know, that was not a break. So here is the really important stuff that I want to point out. The really important thing that I want to point out is how we made every single long that yen had free. So you know, we have this long over here, you know, the 96.5s, you know, and you know the stop loss was like 12 pips or something. That's like 10 pips. So it made longs free. Very important. It made longs free. After that, it failed this series. When it failed this extension long, we had only one valid long entry next, which was all the way halfway back long, which was an ambush long. Ambush long meaning that it broke. It came after breaking the halfway back short from the NFPs. This long made longs free, and if you go to a tick chart, you will see that. I'm not sure if I'm going to see it on the 1 minute chart. I know because I participated, it did make longs free. Let me just check. This is a 1 minute chart that I am. Well, not sure you can see it, but okay. So this stop loss over here was like 16 pips, and the rally was 10 pips. But it did make me free, or am I drawing the anchor wrong? Let me check. I think actually it was a spike. I really think I might have to go to a tick chart for this one, because I think it was a spike into the 50, and then from the 50, the spike at the 50, you know, like this tick chart is on. Okay. Okay. Let's hope this actually gets filled. Okay. Well, this is going to take a while. Oh, the euro dollar is getting pretty nice bid. Okay, that's okay. Cool, cool, very cool. Okay, the tick chart's not loading. So I think this is the maximum I can have on FXCM is in ticks, which is a problem because I cannot actually, for some reason, I cannot install Tink or Swim on my computer. I know this is awkward, it really is, but I really can't install Tink or Swim. Okay, well, take my word, it didn't make longs free. If you don't want to take my word, you know, just continue testing the stuff that I'm showing you for yourself. So anyways, it broke this long setup, and after breaking this long setup, we immediately traded the original long setup. Now you make a case that we traded same anchor new high, that is just fine, you know. The only problem with the same anchor new high and the old anchor is that you really, at least for me, I'm not sure which profit target I want to have in this case, but you can see how it's getting extremely sharp participation from where it should. And you know, if you move to the hourly time frame, this looks silly bullish. If you move the 4-hour time frame, this again looks silly bullish. So my whole point on the yen process is that, you know, trend is your friend, and I don't see a point. A lot of people I know disagree with me. A lot of people try to fade me on that stuff and so on. I really don't see any point at all of fading the long setup. We are in a valid uptrend until we fail this trend, guys, and this is extremely important. This is extremely important. Now I am looking for 97.15s. You can be sure that I'm going to offload a bit earlier as well, but I am probably going to let people on Twitter know. The participation is simply amazing. Oh, the euro dollar. Okay, okay. So the euro also could actually make me free. Nice. Now, so this is the Dorian, guys. Extremely clear series of longs. Okay, we broke the micros, and the point to remember after breaking the micros is simply that despite breaking the micros, we still had participation from the original long setup. So what I'm trying to say is we are in an uptrend until it fails. If we break now, this is where it gets a bit tricky. Now, if we break this long setup, so if we break, I'm going to go with the conservative setup. If we break the 95.35s, I would say there is a relatively good chance that we are either going to go for halfway back long or need to retrade something like this, which is the next daily extension. I am obviously going to, like tell on Twitter what is what and so on when it happens. But for now, I really don't see a case for shorts over here. I really don't see a case for short, so I see some profit taking on the news and stuff like that. Big guys entering new positions. The euro dollar going silly now. Okay, this is good. Okay. In the meanwhile, this should be mentioned that as all of you guys know, there are always two sides to a market, and I have found that a lot of the traders on Twitter, and not even the traders on Twitter, just generally, a lot of traders don't particularly get the idea of what we are doing. We are not trying to predict the market, guys. We are not saying, buy here and this is going to go to 2000, What we are saying is we have a valid level of support over here or a valid level of resistance, and this level is going to make us riskless. That is what we are saying. That is, in our opinion, in the end of the day, the important thing when it comes to trading is really becoming riskless rather than anything else. So that is the name of the game for us. It is to reduce risk. I have found that the biggest difference between a really successful trader and a trader that is not successful is they manage risk, nothing else. And unlike most other traders that trade on indicators, stuff like that, we really are not saying buy here, because we're looking for upside or downside to there. We're saying buy here because we think this level is going to make us free, and if it makes us free, which it should with a 90% probability according to my experience, upon identifying various levels, we are saying we have targets here and there. I hope this concept is understood by people, and I would actually want to make sure, because this is a free webinar and we have people that are outside of our subscribers that are most probably not that familiar. Stefan. They're probably not that familiar with our setups. I would like to just ask if you can get the concept. Guys, do you get what I mean with all the stuff I'm saying? The real value of the system is really the ability to make you riskless. And that is, in my opinion, the most valuable ability that you can have as a trader. Reducing risk in the end of the day is what actually increases profitability in the long run. So I'm seeing that we don't have any questions, so I'm going to assume that people are familiar and that know what I'm talking about. So in the meanwhile, we have to outline that the OEN is getting participation from its halfway back short. A break of this halfway back short is going to give us valid upside pressure towards the 97, towards the 97s. So this is it. Now, the really hard part when it comes to the halfway back system is actually, being able to keep the mentality of re-entering the valid setups be it daily, be it 50-minute setups, whatever. You are going to get break even very often, simply because this is the way the system works. Very low risk, very tight stops and stuff like that. The only really hard part in the halfway back system is to continue, tracking the valid series of the trend and continue entering it despite getting stopped out. I get stopped out on around 60% of my positions for break even, so it does require patience. Now, on the euro dollar, upside, in my opinion, continues to be valid, and I'm gonna go to the site briefly to just check how the hourly can. Huh? The oops, I'm a moron. Pay no attention. What the hell did I just do? Okay, I have no idea what I did, but I have random pictures of people on my screen. Okay, this is a bit weird. Okay, so I'm just gonna go to the report section, and I just want to check on the euro is the fractal similarity I've been talking about doing. And it would be absolutely great if it actually decides to hold the charts. So, okay, guys. So, I don't know if you guys can see, but can you guys see the chart? Or is it okay? For some reason, I think you guys are not seeing my screen. Okay, let me load it again. Okay, so this is the fractal similarity. Can everybody see this clear? This is January 2000 and compared to now on the euro dollar. I don't know if you guys can see it clear enough. We are okay. Please wait. It says okay. Let me do it again. Okay. Let's see. Now, do you guys get the screen? Okay. So you guys see the chart from the website? Let me zoom in a bit. Okay. So okay, I have zoomed in. So guys, this was yesterday when I posted it. Might be screwing up things a little bit, but we are currently trading the halfway back. So this was a halfway back wonk, a full halfway back wonk over here, with the difference that we actually broke the short from the non-farm payrolls in January, and we didn't here, but we are literally trading the same setup. We are trading the halfway back wonk from this fractal setup, and this is why I didn't particularly panic on my euro dollar wonk, which is currently up 30 pips and was pretty much down for the most of my for the most of European session. But I really didn't panic because I knew was to actually play out the way that I expected to play. This halfway back was going to hold one way or another, because this was the same setup. So let's just move to January 2000. Let's move to January 2012, guys, just for the fun of it, on the hourly chart. Okay, so it's loading. Here it is. Okay, guys. So this is where we are, in my opinion. This is where we are. I think what we traded is this thing on the euro dollar just now compared to January. Okay, again, the big difference over here is that we actually did break the non-farm payroll shorts, and we didn't break the non-farm payroll traditional this time. However, this, in my opinion, given the other strong evidence, doesn't particularly mean much. It just means that perhaps sentiment is a bit more bearish at the moment than it was at this point. We have to also keep in mind that over here, the euro dollar rejected last January out of nothing. There was no level of support, like there was no full halfway back wonk or whatever. It just did a correction to the upside in a sense. And I would say the difference between this and what we have on the euro dollar, at the moment is that after all we are in a pretty large uptrend right now in the euro dollar for the past several months, which has probably given a lot more time for larger funds and so on to accumulate short positions, which actually put more pressure. On the opposite, here we were in a very intense downtrend, and you can say that here it was the opposite in the sense that shorts were closing their positions. Of course, we will see. If I am right, we are looking for 1.31s today because, okay, guys, let's move. This is the 17th of January when we traded a full halfway back long. So let's go to January, to my calendar. Can you actually see this? Okay, so you see it. So let's go to the calendar. January the 17th, guys, that is Tuesday. So, okay, you can see, guys, that we traded this halfway back long during January the 17th. We are Tuesday today, March, which March are we today? The 12th? Or something like that, yeah, March the 12th, compared to January the 17th, 2012, and we traded this halfway back long. The timing is a bit different, but I consider this irrelevant. And the really important part for me is that we pretty much broke, by the end of the next day, we broke the non-farm payroll range. So if my theory is correct, what I have been talking about when it comes to this fractal probability and fractal similarity, is that tomorrow we should be well above the non-farm payroll highs. So what we should look for tomorrow is a move in the euro dollar at around the 1.32s. So we are looking for the 1.32. Shit, okay, I'm trying to move my stops. So we are looking for the 1.32s on the euro dollar tomorrow, and that would be my confirmation. That would be my confirmation that what I'm looking at is completely valid. And to further reiterate this point is, you know, if we actually do go over there, which is obviously a huge move, we are going to break this short that we have been holding for ages. So this short, was this the one? Okay, give me a second, guys. Sorry, it was an extension. Okay, extension short. Okay, okay. No. Ah, okay. This short. I'm sorry, guys. So this short that we held. What am I doing? I'm going crazy, guys. That's because I haven't been looking at shorts at all in the euro dollar. See what happens when you like feel extremely strongly. So this is the extension short on the euro dollar that we held on the non-farm payrolls. They never went to targets. As a matter of fact, we are rejecting from what Alexander has found, and you know I pretty much agree with him as a very valid level of support. So much, if I'm right, tomorrow we will have broken this extension short. And the importance of the breaking of this extension short is because we are in a daily uptrend, you know, and we are in a bullish Elliott wave triangle, which pretty much means we are in a range on the daily time frame. But we are right now in a bullish uptrend, you know, with a very straight drive pattern pointing to the 1.41s. So what this means is that the break of the first short, because we have had an elevator down, the break of is in a sense confirming, you know, the new upside targets. So the moment we break above the 1.317s, 1.318s, to make it clear, you know, if we really go to the 1.32s by tomorrow, as I expect, this is like telling me, you know, okay, we are going to new highs, and I am not going to look at any shorts at all. And I know that the fundamental players around the world are going to, you know, call me crazy and probably start bad mouthing me, but no, it is the way I trade, so everybody has his own approach. So that is on the euro dollar. Is this clear, guys? Does this make sense, or did I just totally confuse you? That's exactly the 2012 forever. So we need to remain vigilant on both sides of the market. I mean, at the end of the day, we didn't trade the 1.292s, a level that we have been eagerly awaiting. However, I do want to point out that statistically speaking, March is a bullish month for the euro dollar. I think that for the past 10 years, we have had rallies more than 50% of the time in March. So, chances are that we are going to rally into the end of the month, Marcin. So I'm guessing nobody is that confused by what I said on the euro dollar. Any question, guys? Well, I'm not seeing any. Peter is typing something, but okay, guys. So that is on the euro dollar. Now let us move to. I've covered the Dow yen. We only have to break this halfway back short to confirm the 97s. I'm going to patiently await and see what happens. Would really be a sucker if I don't get the upside I'm looking for, but it is the way it is. In the end of the day, we only care about being riskless. I'm going to move from the Euro-yen simply because I've had this setup for ages, and this is becoming extremely frustrating, wiping around 200 pips of gains, in such a silly short amount of time. As you guys can see, we are currently trying to break the halfway back short on yen. Still, we need some 30 pips more to actually conclusively break the halfway back short. What I want to point out on the okay, what do I have? I have too many things drawn here, guys. Okay, sorry, I apologize. Let me remove all that stuff. Remove this setup. Let me remove this. Okay, so the Dow yen halfway back, the Euro yen, sorry, halfway back long, and from the halfway back long, we start blowing through targets, which gives us the next valid daily buy level as this extension long level. We traded this, made longs riskless, and even grinded to new highs, marginal new highs upon trading this setup on late Friday. So the annoying part is I have been running twice profits of around 200 pips, and I have had them wiped twice. So I really wouldn't like the Dow yet get going to the 27s. I think it will by the end of the day, simply because this is the Yankos we're talking about, and they are max paying for shorts always. It's always absolutely always max paying for shorts, guys. Honestly, I have yet to see a more annoying set than the Young crosses. So we traded this right now. We never even retraded the unlike the Dow yen, we didn't retrade this wonk setup. And I think that we are going to straight away start blowing higher, and by the end of the day, all the bears in the yen crosses are gonna be like, what the fuck just happened? But that's me. So I have maintained, I continue to be looking for the 130s. Call me crazy, maybe, I don't know. I might be crazy, I have had twice 200 positions running, and I haven't booked anything outside being listless yet. So that's about it. Yeah, we are in micro longs on the euro yen, starting to blow higher. Again, we have to break this halfway back short over here to either confirm a range in a long setup or to confirm 1.27 target. The only safe entry here, in my very honest opinion, is this long entry at the 124th, pretty much. This long entry, or like in my case, this long entry. This is like the only safe entry. I don't consider shorts to be a safe entry for more than one. Basically, the trend is up so much that I fail to see how playing against this very strong trend before we have a confirmed level of resistance and the confirmed series of short foot makes any sense in the yen crosses. Does this make sense, guys? I'm especially focusing on the people that are not subscribers because basically I'm doing this webinar free today, especially for the guys that just follow me on Twitter, that appreciate what we do and just like to join us once in a while to make sure that my point is clear across the board. And Weidman is boosting the euro. Nice one. Thank you, brother. Weidman. I love this guy. He's probably the only central banking that has no lying in him. The Germans. I almost feel like he's, like the black sheep in the herd, because he's the only one that really is talking. Well, I think that the the way that the central banker should talk, in my opinion, but that's how I feel personally. So, guys, really, any questions? Doesn't seem like there are any. Please, guys, like make sure that you ask your questions if you have any. Again, I am extremely bullish on the yen crosses. I see no reason to change my bias. I'm actually more bullish on the euro yen at the current juncture than the dollar yen, simply because of the fractal repetition of January 2012 that we have currently going in the euro yen. Because if I'm right, then I'm just going to do something extremely silly to the upside. Extremely silly to the upside. So we are very close to breaking the shorts on the euro and the dollar yen. Very close to confirming the 1.27 targets, which could very well be hit by the end of the day just for paying purposes to the shorts. I mean, hitting the 1.27 after 200 pip sell-off on nothing is like the max pain that shorts can get, They were just getting excited. And I can assure you that the shorts are not looking at the long levels that we are looking at. So, they will be shorting the bottoms, not shorting the tops, and they will get stopped and lead to an artificial short squeeze that is going to turn into a trend creator. We just have a little bit more to actually break the short. Let's call it, just for safety purposes, let's call it 20 pips more before we break the short. And the way this is going, we might actually break the shorts in the next 10 to 15 minutes, which would make me extremely happy. So half of my profits are already back on the euro yen, which is a very good feeling because I stuck to the plan. I didn't change anything, and sticking to the plan always pays out. Any question, guys? Anything at all? Come on, seriously. I feel lonely. Simeon, will you make me a tea, please, bro? Yeah, yeah, we do. I bought the other day. Any questions, guys? Either you guys are really smart or I'm really bad at talking about markets on a live webinar. Or maybe both. Peter asks what price I would be looking to add to from. Peter, the problem with this is I would have actually been buying over here simply because I view this as a. Okay, this is one of my awkward quant lines. That is a broken trendline resistance that used to be trendline resistance and it's now trendline support. And I would have been buying here, but the problem is we never actually blew over here. So I might actually start adding on the euro yen the moment we break above the 1.26s. That breakout play a bit with very tight stops. But we'll see. For now, shorts are holding. And the euro also continues to be major pain in. Yeah, Wookie deals in, why. I agree. I have to give it to me on the guy bought the halfway back wonk and is making so many pips right now. Okay, guys. No questions on the euro yen other than when I'll be adding. I'll be adding on a clear move above 26s. On the Aussie dollar, let's move to the 4-hour chart. We have a bullish battle, halfway back wonk, and the daily neckline, and the neckline of the daily wonk setup on the euro Aussie. So I am certainly looking for more upside. Now, this is looking very scary to me from the point of perspective again that I am a bit concerned that potentially we took a second test of the setup and we are not going to get free, which is obviously a point of concern for me. I can make a case we traded over here. I don't know if you can see this 4-hour candle. It front trend our buy level, the ones 126.4s. It front trend them slightly. It front ran them slightly and started going higher. Pretty much made wonks riskless, and then we retraded back down. So I am a bit concerned when it comes to the euro Aussie that I might have to hit the full 40 pips stop loss. On 1/2 size, again, this is a 1/2 size trade because this is a swing, a daily swing. This has 1,400 pips targets, and obviously you cannot play such trade with excessive amount of leverage. Ideally, you should play this trade with 1-to-1 to your account size. So we will see on the euro Aussie. I'm hoping that we are going to get free. We are getting free at the 1.126.4, 1.268. We entered 1.264. If we reject from here, and we somehow magically end today's candle bullish, like a bullish hammer, that is absolutely awesome from the point of perspective that this is going to be a bullish hammer coming from a bat and a daily inverted head and shoulder setup. And that is going to, personally to me, it's going to add quite a bit of the reassurance that this setup is actually going to work to targets. I mean, the targets are extremely huge. This huge inverted head and shoulders has targets at the 1.42s. 1,400 pips from here would be amazing if we actually are able to catch this swing. Mola? Nemexi. So that is on the euro Aussie. Hopefully we will get free. The only point of concern over here again is that in early morning we traded our long setup front term by 2 pips, and this made that setup free, and potentially we are taking a second test which is not gas free. Let's hope I'm wrong on that one as well. Any questions on the euro Aussie, guys? I will say that despite everything, I really do like this setup. Perhaps important to outline that I do like this setup. Sorry? Next take. Oh, sorry, mate. Next take profit. Okay, so we have to take profits targets. The next take profit target is at 1.34. The daily wonk target 1.34, so 1,000 pips from here. Well, a bit less, 800 pips from here. So the next take profit is at 1.34. 1.34 is the next point take profit after becoming riskless, and the last take profit is going to be at the 1.42. Keep in mind this is a daily swing level, and for those of you that have been following me for a while, you guys know that I am a swing trader, and uh, Weidman, Weidman just said that your exchange rate not out of line with fundamentals. Okay, sorry guys, I had to laugh. There is nothing about $1.3 over here that is in line with fundamentals, seriously. Okay, I'm sorry, I just had to make this comment. Uh, that is why I keep on saying the trading on fundamentals is almost like suicide unless you have 200 people working for you to do silly fundamental analysis that we will never understand. Anyways, yeah, the next long level is the halfway back. This halfway back that we are holding. Let me move it. This halfway back we are holding. The next in the series halfway back. We have one halfway back to target. This is the next traditional in the series with 1.34 targets after becoming riskless, Chris. Obviously, this is quite the overstretch, and if we are able to get this with a 40 pip stop loss, I am probably going to be the happiest guy on earth, at least for a while. I do trade daily time frames, and you know, outside of the past month, which really the market conditions were not good for my style of trading, which was swing longs. We had a lot of ranging markets. We had a lot of short-term trades, you know, 15-minute measured moves, while I try to focus more on the daily measured moves. No, I haven't had room to actually trade my way, but no, I love having positions for over 500-600 pips because I have time to do my chart analysis. I don't focus on the short-term time frame, which has a lot of good point in it. As for example, you can see currently in the Dow I prefer to focus on the daily time frame. Obviously, that is not for everybody, but this system is applicable to all types of time frame, to the short term, to the long term, to the medium term. Chris, does this answer your question? Of course, we still have 50 pips higher before we even get through, so uh, that is still a long way off, eh? So that is on the Euro Aussie bullish bat, inverted head and shoulders neckline, and the next 50% long. I actually want to cover the S&P really quickly. My car, most of them. So we have the S&P field targets. Okay, let's just move. Okay, so for those of you that remember, this was the flash crash on the fiscal cliff thingy, pretty much into the end of the year. And from here, we traded extension long one or two or back, and we are currently starting. Absolutely, Alec. Uh, Chris, we entered long yesterday. I'm sure that you should have seen it on the signal feed. You are a subscriber, right? We entered long yesterday at 1.304 with riskless, and currently I wouldn't advise, wouldn't recommend taking any new long positions until we break at least the most aggressive shorts. Because what Alec is saying is a very good point. What Alec is saying is an extremely good, as a matter of fact. We are still we're still not breaking yesterday's highs. We are still we are still not breaking the shorts from non-farm payrolls, which of course adds to possibility further. Thank you, Patrick. I'm glad you appreciate it as one of our new subscribers. So very good to see you here. And see you later, bro. I'm actually gonna tweet this link to everybody. since today we did the free webinar instead of Friday, so everybody can check it later. Otherwise, subscribers, you can find it in the video page. Anyways, Alec, yes, what you said is true. That is why at this point, unless you are in from our level and you're free, I would really not recommend new euro-dollar longs until we confirm break of shorts. There is certainly a lot of reasons why you might actually make a bearish case on the euro-dollar right now. I just prefer the long side. Does this make sense? Guys, at the end of the day, you always have to pick a side in the market. The important part when picking a side in the market is to pick your entity correctly so that you are going to get free. That is about the only important thing in the world to me. I have been trading for a very long time now. I have made a lot of profits. I have made a lot of losses over the period of time I have been trading, and I found this system 2 years ago or so, and I can tell you that the amount of stress running trading this way, finding just the right levels to get long, to get short or whatever, just to become riskless, has not only reduced my stress level, but genuinely improved my trading. Because when you don't worry about eating a full stop out and stuff like that, you are just much more calm. You have much better vision of the way the market moves. That is why I really like, a lot of people get pissed at me on Twitter, for example, for my long S&P call a couple of weeks back from this extension long, because I really don't particularly care if it's stopped or not as long as I get free. I mean, there is always a next trade, guys, and I don't mind being wrong. What I mind is eating a full stop. That is the only thing in the world I actually mind. I know that I'm running an amazing system. We are running an amazing system, statistically proven in any sense. For me, the only important thing is being free. Eventually, I'm going to get the trade that I'm looking for. It's just a matter of patience. In the end of the day, trading is all about discipline. Something I am lacking a bit, and that is what I'm improving on at the moment. Improving my discipline. And actually the site is helping, guys. For example, just to make a point, if I go back a couple of years, this won't 20 times. Exactly what Steven said. Like a year ago, I would have exited this trade, and I would probably even have switched sides. I would have gotten whipsawed several times, and I would not be in this trade. So, this is just to the point about discipline. I'm riskless, I have one half of my position for plus 130 pips, which is equal to my stop loss. That is the way it should be. Simple as that. I actually used my dollar yen as my profit taking pair for my let me check. Yeah. Let me see. Yeah, guys, you can see 84 pips here, 34 pips here, 36 pips here, 5 here, minus 31 here, 5 here. So as you guys can see, I use the dollar yen to book profits instead of the euro yen. I'm just using the two setups parallel to actually, make sure that I'm booking something in the meanwhile, simply because I'm considerably more bullish on the euro yen than the dollar yen. Anyways, what was going on the S&P, I got drifted away. Sorry, guys. So on the S&P, this is the 4-hour chart. This chart is probably 4 months old by now. Well, not 4 months, 3 months by now. Right now we are blowing through targets. So the next valid wonk entries are from this daily wonk. We have had this. Can everybody see this, guys? Can you see the micros? Can you see how the next valid daily wonks traded and made and traded to target? Can everybody see this on S&P 500? Can you guys see how after we started this new series of extensions from over here? So now we have valid buy levels over here. So this buy level on the S&P is 1,545. against 1542s. Oh, sorry guys, I'm drinking tea, so excuse my munching noises. Well, I'm guessing that everybody has this clear. So anyways, this is the next valid daily level on the S&P, and until we break the 1542s, the 1542s, until we break the 1542s on SPX 500, there is no reason to anticipate a larger pullback. Simple as that, guys. Simple as that. Too much noise around the markets, which like is created by news wires, by fundamentalists, and so on, and that pretty much serve as a means to make people lose track of what's really going on. So I'm just saying, guys, until we break this level, the 1542s, 1542s, I see no reason for a larger pullback in the S&P 500. Is that clear, guys? Come on, please, somebody. Don't leave me hanging. Okay, Marcin, what is not clear? Fair enough. Okay, I would like to hear Alec. Okay. Well, let's see. We have that many agreeing people today. It's a rare trait. uh, so yeah, that's about it, guys. Trend is up and or trend is down. It's not, for example, in the pound. So let us move to a little bit more exciting market. Market that is considerably more bearish than everything else. So I mean, if I really wanted to be a bear on anything in the FX market right now, against dollar, that would certainly be the pound. So we have a very clear series of shorts, one halfway back short. Okay, let me just draw this properly. Below two targets, then upon this short trades micro halfway back, which by the way is over here. And this halfway back has now reached targets. It failed to reach targets yesterday. Now we have the potential for this short to trade. We are trading this short. This is the next in the series shorts. I don't particularly like it. What I'm actually more interested when it comes to the pound on the short side, very important, please acknowledge that I'm talking on the pound on the short side, is this level. So I might actually be shorting the 1.493s, 1.494s actually. So very clear series of shorts on the pound. Again, I'm guessing that a very strong bid in the dollar is going to give us a larger pullback on the pound dollar. So that would be great for establishing a long-term short position. I'm hoping for a 500-600 pip correction higher in the pound because like when I move to the daily time frame, and let's just examine the daily time frame report. By the way, the euro yen continues unable to break short levels. So this is the pound on the daily. We are holding an extension short from here. Extremely clear. This is a way forward, in my opinion. And I've had plenty of confirmation that this is actually a way forward in a complex elliott wave triangle. So this is wave A. I mean, honestly, this is as good as it gets. So I don't see any chance that we aren't going to see at least the 1.3s again. And we have now broken this wave triangle to the downside, and we are looking for a fifth level, for a fifth wave. Ideally, we targeted the 1.21s, but this optimistic 1.3 or so on the pound. However, sorry guys, what I'm looking for is the next short level. As you guys can see, we traded this halfway back short yet again. So I am going to draw the next traditional from over here that gave us this downside. Oh, by the way, I just realized that the daily short went to target just today. Can you guys see this? This is the pound. Can everybody see this? The short, the daily short from 1.7 to over here just went to targets. Can everybody see this? This is actually very major. I just found this. I literally just found this. So you can see how we touched the daily targets, and we are seeing a bounce from touching these daily targets, guys. Can everybody see this? Okay, let me just remove this larger short. Check this. From highs, this is I'm not sure. From highs in 2009 to pretty much low 2012. Well, 2013, 12, whatever. We have just reached targets on the short that we held. Can everybody see this? This is extremely important, guys, and that is why I'm emphasizing this much. So I'm guessing that the lack of response means yes. So that means that the next traditional short is the take. And okay, guys, check, this is beautiful. Like if we assume this is, the way it is, the next short lines, and this goes very well with the way technical analysis goes about triangles. The next short aligns with where we broke this triangle. So the next short aligns with the trend line, with the broken trend line. And this is beautiful, and certainly 1.559 is a limit short level on the pound dollar. Can everybody understand this and see this? Guys, even if you get it, please just let me know. So this is extremely beautiful. That is why I have said since yesterday that I am going to be a bit less aggressive right now in taking new pound shorts. We have a daily short to target, and like if you go to classical technical analysis, I don't know if you guys have read books on classical technical analysis and classical patterns. I'm sure most of you know that they trade a lot on patterns. When you break a symmetrical triangle, in this case, this is both symmetrical and the perfect edit wave triangle and fourth wave, complex fourth wave, you expect a retest of the broken triangle to get short. So this would be like the most perfect opportunity, in my opinion, with an extremely tight risk to get short for like 2,000 pips. This is like a trade that's going to take like half a year to develop, if not more, and I'm certainly going to take it. I'm actually opening long-term account for trades like this. No, I'm probably going to take this trade with 20k leverage or something like that for 3,000 pips, but it's still a good profit in the end of the day, and it is a good opportunity to grow a separate account in the long term. So this is like the next setup I'm really hooked up on. I just want to show to check the yen. We are getting very good participation from the shorts. Interestingly enough, however, the euro yen is not exactly in the same boat, so we will see how this goes. Now, if I remember correctly, yeah, over here was the same situation. We didn't actually break the short straight away. We grind it around it for a while. Let's see if we get participation from this micro halfway back wonk. We'll see. I have to admit, shorts are holding, and as annoying as it is fact, you know. Annoying or not, the truth is, it is holding shorts. But I continue to remain bullish on the Dorian, so blame me. I would really like to see the euro dollar just do 100 pips to the upside now. Would be pretty awesome, but you know, kind of doubtful. So dollar yen trend here. Let's see. I'm going to move to the dollar. Okay, guys. Actually, as much as I like this chart, I need to clear space for the short-term charts now. So that's that. We have on the euro pound targets that still have to be filled at the 0.883s. I think I've covered almost everything. The euro dollar is getting a very strong bid right now. I hope that it continues getting a strong bid. And actually, the bid in the euro dollar is weighting considerably on the dollar yen, I think. Now, I just want to cover the Aussie dollar really fast. I anticipate the Aussie dollar to trade. It is a similar setup like the one on the pound. I anticipate, oh, euro dollar short squeezing. Beautiful. Let's see if the euro yen can break shorts now. Anyways, what I want to point, we are holding this halfway back long. Simeon took this trade, amazing, very good trade. What I want to point out here is that the wave structure is simply beautiful. A, B, and now we're doing the C wave into a halfway back short. I was originally going to take this halfway back short, but right now I don't like the timing. And I really don't like the aggressiveness of this bid, so I am not going to place a limit order to short this just yet. But it has to be pointed out that the targets of the halfway back long that we held, you know, from this low at the 101.15s to this high at the 1.03s, has targets where the halfway back short is. So if you want to be short the Aussie, like we literally are 20 pips away from there. Beautiful. I think that I actually think the Euro Aussie is gonna make us free. Whoa, I'm gonna be extremely happy if that happens. I'm also not gonna be particular like I'm not gonna believe it, you know, but it would be pretty awesome if it makes us free. So I am going to stop recording now. Do you have any questions before I stop recording, or should I just start keeping? I'm gonna keep the room open at least for a while, a bit more, because I want to track with you so here what's going on in the markets. So any question before I stop recording? Chris, you mean which level we get in the euro dollar yesterday? Do you mean which level we got in? Which level we entered long? Is that what you mean, Chris? You're one of the subscribers, so I'm surprised you didn't notice this. But I posted a signal yesterday on the euro dollar, and this is where we got long. We got long at 1.304, 1.304. We didn't send an email, bro, but you can find the signal. Okay, let me just go over the signal feed with you. I will farm over here. Let me just okay. You see this? Yeah, posted it yesterday. I'm sorry you missed it. The thing is that it was a market order, so what you should set up on your Twitter is to receive emails when we send emails on the signal feed or SMSs or something like that. That way, you are never going to miss the stuff that we hand out. The thing with SMSs is I think they do charge you, so I don't want to I don't want to give you huge bills from SMSs. But you can set it up so you get emails when we post something on the signal feed. Anyways, on the euro dollar, just to make sure everybody knows what's going on, um, we are trying to break the halfway back short from the non-farm payroll day. I anticipate this short to get broken pretty aggressively. So I'm gonna stop recording, guys. Thank you very much for attending, and euro yen is not moving along simply because the dollar yen is not moving along, Rafael. I'm gonna stop recording now, and we are just going to